Take a look at this one. So we've been in a bullish cycle for quite some time, and most recently they were in an aggressive accumulation phase. But take a look at the data here. How's it going, fellow traders? Magic Trader here, and this is your CFTC Report data for the data that was recorded on March 21st, 2023. Here's a brief snapshot of the positions held by the institutions as of that date. And welcome back, welcome back. We're going to take a look at the CFTC data. It's all caught up. We have all the data. And so we're going to take a look at what the banks have been doing up until March 21st. Okay, so let's start by taking a look at gold. All right, take a look at gold. We had a massive move, okay? And as price was moving up massively like this, what do you think the banks were doing? Increasing longs. Isn't that what we've been talking about? Didn't we say watch for the banks to start increasing their long positions? Take a look. 215, 230, 237, they're increasing their long positions, okay? And so what happened with that? Big increase in price action right off of the institutional buying zone. Isn't that incredible how price comes into these buying zones and magically price rallies up from them? So now price is rallying. And if you take a look at what retail traders are doing, they are shorting, okay? They're mostly short on gold right now, as the banks are just getting ready to propel price to the upside. Now, where do you think the retail traders got those short positions from? Well, I'll tell you, from the banks. You see, they were massively short at 117,000. And if you were just looking at the CFTC data to see, what they're doing, and you see this increase in short positions from 99 to 117, that might have gotten you excited and thought maybe you should be shorting gold. Well, in fact, they were offloading those short positions from 117 to 90, now to 79,000. All right, so we have institutional demand that's in play. We have price breaking to the upside past the previous highs. Institutions are increasing their long positions. This is no time to be getting in short gold at this point. All right. Okay, let's take a look at oil. What do we see with oil? We had the big drop in oil. You remember that right here on the weekly chart? But again, what did it come into contact with? You see what it came into contact with? An institutional demand zone. What happens when price contacts institutional demand zones? They typically rally up in price. Now, if you take a look at the positions, you'll see that they also increased their short positions, okay? That was to help get price down into that weekly demand zone that we just took a look at. All right, so what do we got now? Well, if we take a look, demand is in play. We got institutions buying, so now we have price pressure to the upside, all right? But we suspect that price might turn around and head a little bit lower, because we do have an institutional buying zone here on the monthly chart that was only quickly tested previously. This weekly demand zone, if you look back, has been deeply tested. So it's likely not going to be the main driving factor of price moving forward, which is why I suspect we will likely see price decline over the next couple weeks or so, and then we'll see price actually make contact with that monthly demand zone. Okay, US dollar, take a look. Not much going on with the US dollar, but if we look at the data, what do we see? Long positions are cooled off, okay? What does that mean? The banks are not focused on long positions right now. Look at shorts. They used to be a little bit aggressive, but then now they are not, all right? So the banks are not focused on long positions, and they're not focused on short positions. So right now there is no bias. And if you look at the coloration of the cells here, they are blue. That means neutral. That means there is no strong direction that we can base any type of movement on right now, okay? Because they're not forcefully getting in longs, they're not forcefully getting in shorts. So right now it's best to sit on the sidelines when it comes to the US dollar. Okay, now let's take a look at the Aussie. Now, we've been talking about the Aussie for quite some time. We've been talking about how they've been just playing a short cycle game all this time. Look at that. Increase shorts, profit take on those shorts. Increase shorts, profit take on those shorts, increase shorts. All right. So right now, that's where we're at. They are in a bearish cycle, and they have been for quite some time. And if you take a look, you'll see a dark red bubble here, meaning they're in an accumulation phase. So they're accumulating a short within a bearish cycle. So there's no reason why anybody should be getting in long right now. Even though we're coming in very close to contacting this demand area, at this point, nobody should be thinking about even getting in long. Okay? Wait until they start buying, and then we can start buying. USCAD, take a look at this. Take a look at this. Now, if you pay attention, you'll see that we have been inside of a... Look at that. Okay? A bullish cycle. This is a bullish cycle that's been taking place. And up until recently, they were aggressively accumulating a position. But just recently, you can see a drop from 92,000 to 75. So they're offloading, okay? Which is why I have it labeled as distribution. They are distributing their long position right now. So is that in preparation for a drop? Well, there is some evidence that we've been collecting suggesting that we might be seeing a drop in the dollar. So that just might be what's setting up here. We don't know 100%, but this is something that we are watching for. So just be aware of that. You should not be going in long or shorting the USCAD right now because they are offloading their long positions. Don't be the sucker that's going to be buying those positions, okay? Retail traders right now are mostly short, okay? Mostly short at this point. All right, let's move forward. Let's see, what do we got here? US Swiss, not much going on. Longs are cooled off, shorts are cooled off, nothing's really going on to the chart, okay? What I can tell you is retail traders are mostly long, which is a good sign for this to go even further down. Okay? Euro. Take a look at this one. So we've been in a bullish cycle for quite some time, and most recently they were in an aggressive accumulation phase. But take a look at the data here. And what do you see? A drop from 240, 233, 222, 215. They are offloading their long positions. Okay? And I can tell you, you know who is buying those long positions? Retail traders. They were buying those long positions, yes indeed, okay? Now recently they started switching to shorts, all right? So there's a short bias right now with the retail traders. They're mostly short. But if you can tell, this is not a time to be going short, all right? And this is not a time to be going long, in my opinion. Now I have instigated some trades on here, initiated I should say, some trades on the euro, and I've shared them with the members. And this is going to be a longer term play for me. But what I am seeing here is they will likely offload these long positions to retail traders. And then when they drop price, I don't know how far they're going to drop it, but when they shake retail traders out of those longs, then I believe they're going to take those longs from them and shoot price to the upside. Okay? So it's a waiting game to see how things will play out going forward. But this is what I suspect will likely take place. Pound, what do we see with the pound? All right, so longs, they just offloaded longs, all right? Interesting, just like what we were saying with the euro. They just offloaded longs from 49,000 to a cooled off 28,000, but they also offloaded short positions. Now, if you take a look at the coloration of the cells here, you'll see that they are blue. What does that tell you? That tells you that they are neutral. They are neutral, this pair right now. So you should be neutral. If you want to trade alongside the big players, you got to do what they are doing. You got to have the same bias as they do. All right. Right now they're neutral. You should be neutral. That's all I will say at this time, except for the fact that retail traders are mostly short right now. We got demand in play and retail traders are mostly short. All right. Let's take a look at the US dollar, Japanese yen. What do we see here? Okay. Look at long positions. Interesting, interesting, interesting. What we can see is that they were aggressive with their longs. 80,000, 86, 92. Now they offloaded those long positions, dropping them from 85, 92, 85, and now 73. Short positions, do you think the banks care about short positions right now? Not really, okay? More like they were increasing longs from the demand zone that we contacted, and now they're offloading those long positions at the highs. What's likely going to happen? Well, like I said, we've been seeing a lot of evidence to suggest that the dollar is going to drop. Right now, they have a bullish bias, but that's because short positions are so cooled off, and they just had a very aggressive position on long positions, okay? So that doesn't mean that you should be buying because the bias is bullish. It just means right now you should sit on the sideline, because if you understood the correct context of why this is bullish, you'd realize this is not the time to be accumulating. They are distributing those longs. Don't be the sucker that's going to be buying, okay? And if you look at retail traders, they are long, okay? They are also short, but they are a little bit more long than short. And that's because the banks are offloading their long positions to them. So that leads me to suspect that there's a good chance that we see price drop like that. All right, last but not least, we have the wonderful world of the New Zealand Kiwi. And what do we see? You see what's happening here? They offload their long positions, 22,000 to 6,000. You think they care about longs right now? Not really. If you take a look at short positions, what do you see? You see them more aggressive with their shorts, okay? I wouldn't say they're super aggressive right now because, yes, we see the coloration of the cells lately have been red, but that's only because of the massive amount of long positions that they closed off, all right? So I would be waiting on the sidelines, waiting for something a little bit more concrete to show up on the Kiwi. I can tell you that retail traders are mostly short. Again, mostly short when we have a demand zone that's in play. Not a good idea. If you want to learn more about how we do this type of analysis, if you want to empower yourself with the ability to recognize what the banks are doing so that you don't make the mistakes that most retail traders do, follow us on Twitter, subscribe on our YouTube, and make sure you visit us at www.whiteoakfx.com. Thank you. Enjoy your day. We'll talk to you later. Take care.